Welcome to the Deep Dive. Today, we're jumping right into the Green Valley and Sahuarita real estate market here in Arizona.
Yeah, we've got the latest report, the one from the Green Valley Sahuarita Association of Realtors for June 2025.
Exactly. And our goal, as always, is to really pull out the key insights from all this data.
Mm-hmm.
We want to give you that shortcut to understanding what's actually going on.
Cut through the noise.
Okay, so let's kick things off with those big picture numbers for June 2025. What's the immediate snapshot telling us? Are things still booming, or are we seeing a cool down?
Well, the first thing you notice looking across the key metrics is definitely a shift. It's pointing towards, a cooler market compared to this time last year.
Cooler, okay. How so?
For starters, the median sale price, it came in at $323,200 for June. Now, that's down 4.1% from June 2024. That's pretty significant.
Down 4.1%, okay.
And it's not just price. The actual number of sales dropped too. We saw 139 homes sold, which is down 12.6% year over year.
Wow, okay. So fewer sales, lower median price. That definitely sounds like a cooling trend. What else backs that up? What other signals should we be paying attention to?
Well, a big one is how long it's taking for homes to sell. The median days on market dom, it jumped up by 15 days, actually.
15 days. So what's the total now?
It's sitting at 45 days median. So homes are clearly taking, noticeably longer to go under contract. That gives buyers more time, more leverage.
More time, right? And leverage. Does that show up in the sale price compared to the asking price?
It does. We're seeing homes generally selling below their asking price now. The average was minus 1.59% off the list price. So, yeah, buyers seem to have a bit more negotiating power than before.
Makes sense. What about the supply side? Are more homes coming on the market?
Yes, quite a few more. New listings were up a full 20% compared to last June. So, more choice for buyers.
Okay, more listings.
Yeah.
But are buyers snapping them up?
What about pending sales? Ah, that's the other side of the coin. New pendings, those are the homes just going under contract, right? That number is actually down. It was 134 in June, which is 12 fewer than last year.
Got it. So inventory's building.
Exactly. Total active listings reached 624, and that pushes our months of supply figure to 4.49 months.
Okay, and just to quickly explain, months of supply for everyone that basically tells you at the current sales pace how long it would take to sell all the homes currently listed, right?
Precisely.
So 4.49 months.
Yeah.
That sounds like we're moving away from that super hot seller's market and maybe closer to what people call a balanced market, usually around 5 or 6 months.
That's right. We're definitely inching closer. It's not quite there, but the trend is clear. Fewer sales, slightly lower prices, homes sitting longer, more inventory. It all points to that less competitive environment.
Which really makes you wonder, how did we get here? Let's look back a bit.
Yeah, what's the longer-term story?
So this June snapshot shows cooling. Let's dig into that historical data now. Thinking about pricing over the last, say, 3 years in Green Valley and Sahuarita, how has that evolved? Was it just a steady climb and now this dip?
It's been more of a peak and then a gradual descent, really. If you look at the median sale price month by month, June 2025's $323,200. Well, that's lower than June 2024, which was $337,000.
Okay.
And it's even lower than June 2022 when the median hit $347,000. So we're definitely off those peaks we saw a couple of years ago.
Right, so a noticeable step back from the highs.
Yeah, and it's similar if you look at price per square foot. That peaked on an annual average basis at $208 back in 2024. Now, the June number is $191 per square foot.
So it's not just the overall price, but the value per square foot has also adjusted downwards?
Correct. It suggests, a recalibration of what buyers are willing or able to pay right now.
Okay, that covers pricing. What about just the sheer activity, the number of deals getting done, the sales volume? How has that looked over the past 3 years?
Well, activity has definitely fluctuated. We saw some pretty high points, like April 2023 had 222 sales. And even this past April 2025, we saw 202 sales. So there have been busy months.
Sure.
But comparing June to June, this year's 139 sales is lower than June 2024's 159 and definitely lower than the 200 sales we saw back in June 2023.
So a clear downward trend for June specifically.
Yes. And remember those new listings we talked about? They've generally been trending up over the last few years. June 2025 had 186 new listings. Compare that to 155 last June or 168 the June before. So supply is increasing.
Right, more homes hitting the market.
But the new pendings, the new contracts being assigned, they're going the other way. June 2025 had 134. Last June, it was 146. In June 2023, it was 185.
Okay, so that gap is widening. more listings, fewer immediate takers.
Exactly. That's the key dynamic. More inventory is building up because demand, while still present, isn't keeping pace with the new supply quite like it used to. It's shifted from that really intense, maybe overheated demand phase.
So that makes sense. It paints a picture of a market finding a new balance.
Definitely. A slower pace, more thoughtful decisions, perhaps.
Now, here's where it gets really interesting, I think, especially for anyone out there actively thinking about buying or selling right now. How fast are homes actually moving? And what's happening with asking price versus sale price? Are buyers getting deals?
Yeah, this is the practical side of it. And the answer is things have slowed down dramatically.
Mm.
That median days on market figure we mentioned earlier, the 45 days in June 2025.
Right.
Let's put that in context. Go back just 1 year to June 2024. It was 30 days. Go back to June 2023. It was only 18 days.
18 days. Wow, that's incredibly fast. So going from 18 days to 45 days in 2 years, that's a huge shift in the buyer experience.
Huge. It means less pressure, more time for inspections, for negotiating, just generally a less frantic pace for buyers.
And the negotiations.
Yeah.
You mentioned homes selling below asking price on average.
Yes, that trend is pretty consistent lately. That minus 1.59% average in June means typically sellers aren't quite getting their initial asking price. It's a clear sign that buyers have regained some leverage. It's a very different scenario from, the bidding wars we saw maybe 2, 3 years ago.
Absolutely. So this cooling trend, this buyer leverage, does it feel the same across all price points? Or are certain segments still, really competitive while others have softened more?
Great question. No, it's definitely not uniform. The market gets much more nuanced when you slice it by price.
How so? Where's the action still happening?
Well, if you look at sales over the entire last year, the $300,000 to $399,999 range actually saw the most activity. 53 sales fell into that bracket.
Okay.
And importantly, the median days on market for that range was relatively low at 37 days. So that 300K, 400K segment still seems pretty active, relatively speaking. Demand is holding up there.
Interesting. So the middle of the market is still moving. What about other price ranges? Where is it maybe toughest for sellers?
If you look at it through the lens of months of supply, remember, lower means faster market, higher means slower. The lowest supply is actually in the $200,000 to $299,999 range.
Oh, even lower than the 300K range.
Yeah, just 2.9 months of supply there. That suggests it's still quite competitive for buyers looking in that bracket. Inventory is moving relatively quickly.
So the lower end is still pretty tight.
It appears so. But then you look at the higher end. Take the $800,000 to $999,999 range, for example.
Right.
There, the months of supply jumps up to 8.0 months.
8 months. That's well into buyer's market territory, really.
Absolutely. 8 months of supply signifies a much slower market. Homes in that price range are sitting much longer, giving buyers considerably more choice and likely much more negotiation room.
That's a huge contrast from under 3 months at the lower end to 8 months at the higher end. Really shows you can't paint the whole market with one brush.
Not at all. It depends heavily on what price point you're looking at.
Okay, let's get even more granular then. We've looked at price points. What about different types of homes? Or different areas within Green Valley and Sahuarita? Are we seeing the same trends everywhere? Or are there specific, hot spots and cool spots emerging?
Oh, definitely not the same everywhere. The segmentation is really clear when you break it down further. Let's start with property types, comparing June 25 to June 24.
Sounds good.
Single-family residences, detached houses, they still make up the bulk of sales, 97 in June. But even they saw sales drop by 11% and total dollar volume fall almost 14%. And their days on market increased by 15 days, up to 42.
So even the main segment is feeling the slowdown.
Yes. But then look at townhouses. They showed more resilience. Sales were only down about 3%, and their total dollar volume actually ticked up slightly by 0.2%. Their median price increased too.
Interesting. So townhouses held up better.
Seemingly, yes. Maybe appealing to a specific buyer segment right now. But then condominiums and manufactured homes, they saw really substantial drops.
How substantial?
Condo sales were down over 44%. Manufactured home sales down almost 43%. Volumes dropped significantly too. And condos specifically, their median days on market shot up to 109 days.
109 days. Wow, that's a long time on market for condos.
Very slow moving for that segment right now. So big differences just based on the type of property.
That's incredibly clear. So a townhouse buyer and a condo buyer are having vastly different experiences right now.
Okay, what about geographically? Any specific neighborhoods or regions standing out?
Yes, this is maybe the most striking part. Green Valley Southwest It's a major outlier.
An outlier how? Stronger or weaker?
Much, much stronger. Sales in GV Southwest surged up 50% compared to last June. Volume was up 66%. Median price increased by
Over
$35,000.
50% increase in sales in this market.
Exactly. And here's the kicker. The median days on market there actually decreased. It dropped by 4 days to 37.
Decreased. While the rest of the market is slowing down. That's fascinating. Why do you think that particular area is bucking the trend so hard? It's hard to say definitively without being on the ground, but often when you see a micromarket perform like this, it points to something very specific. Maybe it's a popular new development coming online, or perhaps a specific price niche within that area remains incredibly attractive. It's essentially created its own little bubble of demand.
A little hotspot. So where's the flip side? Is there a corresponding cool spot?
There is. If you look at Green Valley Northwest, it's almost the mirror image. Sharp declines there. Sales down 48%, volume down over 52%.
Ouch.
Yeah, median price dropped by about $14,000, and the days on market increased by 21 days, up to 51. So a very distinct cooling zone compared to the heat in the Southwest.
Incredible contrast within the same broader area. Okay, one more breakdown. What about home size? Does the square footage matter in this current climate?
It seems to, yes. And maybe not quite how you'd expect. Smaller homes, let's say under 1,000 square feet, they really struggled in June.
Struggled how?
Sales were down nearly 50% year over year, volume down by half. And their median days on market was really high, 85 days. That's way up from last year. Suggests demand for the very smallest homes has softened quite a bit.
Okay, so smaller homes are sitting longer. What about bigger homes?
This is where it gets interesting again. Larger homes, specifically in the 2,500 to 2,900 to 99 square foot range, showed surprising strength.
Strength, as in sales were up.
Way up. Sales increased by over 85%, volume up nearly 73%. Now, their median price was actually down a bit, but they sold incredibly fast.
How fast?
Median days on market was just 18 days. That's actually down 5 days from last year.
18 days.
Yeah.
For homes in that size range, that's lightning fast, especially now.
It really is. It suggests strong demand persists for that specific size category. And even slightly larger homes, the 3,000, 399 square foot range, they also did well. Volume up, median price up significantly, and still selling quickly at 23 days. DOM.
So it seems like demand might be shifting towards some of those larger homes, even as the overall market cools.
That's certainly what this specific data suggests for June. Less demand at the very small end, surprising strength in some of the larger categories.
Okay, so let's try to wrap this all up. We've gone through a lot of data. The big picture for Green Valley and Sahuarita in June 2025 is, well, it's clearly a cooler market overall, right?
Definitely. Fewer sales, prices generally softer year over year, homes taking longer to sell. That's the main narrative.
But as we've just unpacked, that main narrative hides a ton of variation. It's not one single story. Performance really depends on property type, the specific location, like that huge difference between GV Southwest and Northwest, and even the size of the home.
Exactly. It's a market in transition. And those general trends, while true overall, they just don't capture the full picture. You've got these pockets of resilience, even strength, alongside areas that are cooling much faster.
Which leads to a really important thought for anyone involved in this market.
Yeah, the takeaway here is that understanding these nuances is critical, as buyers seem to be gaining more leverage generally, but certain segments are still moving fast or showing unique strength. It really begs the question, how does this detailed knowledge shift your strategy?
Right. Whether you're thinking of buying or selling or maybe just keeping an eye on things, understanding these micro trends seems more important than ever.
It influences timing, pricing, negotiation, everything.
So the question for you, the listener, is, what stands out most to you from this deep dive? How do these specific details change how you view the Green Valley and Sahuarita real estate landscape right now?